Hey everybody, Courtney Smith here with our March 20th, 2023 edition of Wall Street Winners, heading into our 28th year. Unbelievable. I don't look a day over 29 in that picture. So let's dive right into it. One of the most important, first of all, let me just cut the chase. I'm bearish now. Now don't have a signal that we want to go, seriously short, but when we break those December lows here on the S&P, that'll be my final signal to start getting short. Until then, I'm going to remain pretty well flat, but bearish, looking with my finger on the trigger. Here's a perfect example of what I'm talking about. Here we see, over the last week, a pretty nice rally in the S&P. I mean, a pretty nice rally, but at the same time, the purple predictor is going down, which means that the smart money is selling. At the same time, the dumb money is buying. So this is very, very bearish. Usually the smart money's right. That's why they're the smart money. So here we see a bear market in the smart money, a bear market in the market. But in the last week, they diverged. And when they diverge, you nearly always want to take the side of the smart money, which is bearish. Here in the Dow Jones, selling pressure came down a lot. It had gotten way, way overbought, and we talked about that last week. We very rarely see you look down, look over here. Here we see one about the same level, way over here in June of last year, also very high level. It's not sustainable. So the selling pressure backed off, and we got a little teeny bit of buying pressure. But the black line here, which is ADX, is telling us it's a bear market. Over here in the NASDAQ, here we see a little bit more strength. But notice what happened here. Look at this, is very interesting. On Friday, first of all, on Thursday, we had a very strong update. On Monday, Tuesday, good updates. Then a non-event day. Then Thursday, a strong update. And then a little narrow range day, a little bit lower. But look at the volume. This Friday price action is bearish. We're down heavy. We're down on heavy volume. That's what I meant to say. This is all bearish market structure. Seasonality remains on a bull signal, but look, we're right at my signal to go short, which is December's low. So I'm going to cancel. If we break below really last week's lows, that would tell me we don't want to be using the bullish signal anymore. Now, since I'm not buying any stocks, it's all irrelevant at this point anyway. Seasonally, we're in good shape. We're supposed to be going up. Now, the interesting thing is, so far this year, seasonality, the direction has been perfect. But what happened is, early in the year, we were much stronger than the seasonality would indicate. And then this dip that was supposed to happen here in mid-February. It happened, but it happened much stronger than expected. So, seasonality is still bullish. That's the way we have to look at it until we see a break in our seasonality indicator. Asset allocation. We kind of stabilized here. Money's going back and forth between the bond market and the stock market, pretty stable after seeing a lot of money go out of the stock market. So this is actually bullish. They've stemmed the flow of money out of stocks into bonds. But the risk indicator came down. And we're going to see the risk indicator come back to these old levels over here, because as the market goes down, we're going to see people move into utilities and consumer staples and cash, and probably we'll start to see them move into bonds, and maybe not bonds so much, but let's say 2-year treasury notes, things like that, things that have a 4% yield, but that you can get out of them. They don't have a lot of price risk. So look for the risk indicator to continue to move lower. That's bearish for the stock market. Over here, we finally saw the European shares start to catch up with the American shares, but now they were stronger than the U.S. Now they're weaker. Oh, let me go back there. And notice how the market's coming down and the volume keeps getting bigger and bigger and bigger. So the volume is confirming the bear move. Yield curve comes down. So what I've been saying for the last several weeks is this is slightly bullish, but the collapse in the yield curve to more negative, that's not good. That's not good. I mean, it's not really the end of the world because we're already kind of down at extreme levels. But this is just confirming that we're not moving in a bullish direction anymore. We're back to the old lows. This is bearish for the market as well. So look at bonds. Look at this gigantic, we've got two lows down here and three highs across here. A gigantic consolidation. Notice over here, heavy volume as the market moved up, but the volume stayed heavy even though we had a sharp down day, then an up day, then a big down day, then an up day. So, but generally higher. So generally this heavy volume is confirming the bull move. Bond key factors. So last week we had the 10-year treasury. 10-year treasuries is the green line. That's the yield. And the blue line is in Germany, and it came down, and we talked about that last week. And then I said, but gold is going up, and you can see it is going up. But if you look very closely, and I said CRB, which is the actual chart here, was going sideways, but it's broken down. It's broken down, which is actually bearish for yields, bullish for bonds, okay? So that's a big change. So if that's the case, then we have to be thinking that the dollar, as interest rates go lower, that's going to take the dollar lower. And sure enough, here we see the dollar starting to go lower. Look for that to continue as well. If that happens, then gold should move higher. And guess what? What a surprise, it's going higher. Purple Predictor is supportive of this. Once again, look at the heavy volume on the up move. So this is a real bull market here. And we're going to probably want to start to think about getting long gold again. What's happening is inflation is staying high, but yields are going lower, which means that real yields, which are yields minus inflation, are going lower. That's very bullish for gold, very bullish. Now, the only problem with the gold market right now is notice this little green line. That's the RSI. It's up above 70. You can see when it gets up above 70, over here it got above 70, and it did keep rallying for a couple more weeks, but eventually it cracked, got above 70, staggered sideways for quite some time, got above 70, went lower. So this is going to stall the advance for a while. So there's no rush to go out and buy gold like it's going out of style. Gold key indicators. We still have, look at this right here. Here's the CRB. It's bearish. So we can't get super bullish on gold, but for the first time in weeks, we actually have one bullish indicator. You can see it down here, the green line here, that's the Japanese yen. And then gold, of course, is the mountain chart. So we've got one bearish, the CRB, the euro versus dollar, that's the blue one up here. It's sideways. And down here, we have the Japanese yen, bullish, bullish, bullish. So 1, 1, and 1, not that, once again, not that bullish. So we can't get super excited about the long side of gold, but it's the best we've seen in terms of our key indicators for gold for months, okay? All right. Now, I think the market is now finally coming to grips with the idea that we're going to go into a recession, which I've been telling you about for, well, I don't know, 15, 16, 18 months, I don't know, since 2021. I've been telling you about the coming recession, and I think the market's fine. And we did have a mini recession last year. Now we're going to have a deeper one. The real recession is coming up. That means the demand for oil will go down because the West will reduce its demand. We still have the increase in demand coming from China, but that's what gave us this sideways movement here. Now we're losing that momentum from the Chinese buying. Bitcoin, I will tell you, I mean, look, this is an incredible explosion. Now tell me, quick, what would cause anything to go from 20,000 to 28,000 in a week and a half? What fundamentally changed? What fundamentally changed? Well, I'll tell you, nothing changed unless you can say, well, it was a flight to quality. But Bitcoin has no quality, so I find that hard to believe. Now, here's what I think is really going on, and I'm going to do more research on this during the week, but look at the purple predictor. The purple predictor has been collapsing, and I talked about this a couple, I don't know, three weeks ago. We made higher highs on the price, but we made lower lows on the purple predictor. Now here, they're both going in the same direction, but the smart money has been selling Bitcoin, and I think they're probably selling it on this rally as well. So I didn't need to get here so quickly. So I can't get excited. What can I say? What can I say? All right, freebies, I love having you here. But of course, what you should be doing in these times of high stress is going to WSW2021.com and becoming one of the cool kids, one of the fully paid up members, so you can get the actual trades that I'm doing to make money from all this and get a lot more analysis on the market.